What's going on, folks? You're surely here, Papa Goat. My name is James. They call me Mr. American Dream. Listen, I've been licensed in the health insurance and life insurance and annuity since 2015. I've been in that industry. So today, I'm just gonna be covering a couple points with you on why you shouldn't keep all your money in the bank. Okay? I'm just gonna go over two reasons. So now, if you need any information on this when it comes to infinite banking, or you want to bank with using a life insurance bank account, so some of us refer to it, make sure you text the word banking to 321-888-7345 and somebody will reach out to you with more information. So with that being said, let's go ahead and talk about those two reasons. So there is something called fractional reserve banking. That's what the bank use. Now, what is that? Fractional reserve banking is a concept. The system pretty much say the bank is allowed to only keep a portion of your deposit in the bank. So let me put that in numbers. So say you go put $10,000 in the bank. The bank only keep 10% of that 10,000 in that account. So which mean $1,000. And the rest of the $9,000 they use it to invest. For example, they lend it out, they do mortgages with it, they do a lot of things with it. So in return, the bank hardly give you anything on that money. So which means the bank is there investing your money on things you probably don't even agree with, but they doing it anyway with your money. So which explain why a lot of banks actually give, hey, open a free account, free saving. As a matter of fact, some even advertising say they're going to give you money to open an account for them. Why is this? It's simply because the moment you open an account and you start putting money in there, the bank can actually take 90% of that money to reinvest into other investment. Okay? So people don't know that they can do exactly what the bank do with their money, simply because they're probably not educated, or they just need somebody to sit with them to explain to them how that concept actually work. Okay, so anyway, that's the number one reason. Why would the bank be making all that money with your money on top of your money, but they don't give you much? That's number one. Number two, which is what I just mentioned, low return on your money. So the bank is making 7, 8, 9% on your money, but yet in return, you lucky if you get 0.01%. So there is a big problem there, and I'm going to tell you what the main problem is. Inflation. Inflation grow about 3.5% per year. So if your money is in an account that's not at least beating inflation, you're losing money. So let me explain. Say you're renting right now, you're paying $1,200 a month. Next year, rent may be $1,250 or $1,300. That's what's called inflation. The cost of living goes up. So which means if you have $10,000 in a bank, that's not beating the average of what inflation is growing. You're losing money automatically because your money is losing power because it's not keeping up with at least inflation. Okay, so that's the number two reason you should not keep all your money in the bank. So now what I recommend you to do, I recommend everybody, that's just my personal recommendation, that you should have a portion of your money, maybe it's 10%, 15%, 30%, you are putting aside in something that is safe and that's actually growing and beating inflation. So what do I mean by safe? Safety meaning that you cannot lose money even if the market was to drop 20-30%. That money is safe. Safe meaning that you have access to that money when needed at a certain time. Safe meaning that that money is there and is growing at the rate beating inflation every year. I always recommend infinite banking. If you have more questions, just text the word banking to 321-888-7345. I hope this was helpful for you. I look forward to keep educating you. Have a beautiful day and God bless America. Bye-bye.